morning. We're looking at Ether against the US dollar. This is quite interesting because we have reached, this is a weekly chart by the way, we've reached the previous August high of 488. We've been to 495 this week. So we've made a new yearly high. No, we haven't gone the way that Bitcoin has gone, obviously, because I think this one's a little less known. And obviously, when you're looking at cryptocurrencies, you have to, as they're mined, you have to be aware of, are there a lot of these as opposed to only a certain amount of Bitcoin? So that's one reason, although it didn't matter in 2017, it got bought up anyway. But as we have now made a new yearly high, I think this is something that could continue to grow. And also, we're nowhere near where Bitcoin, or where it went. I'm just putting this little line on just for me, really. It's gone nowhere near its all-time highs over here, which are like astronomical. 1424, so nearly $1,000 down, which for me makes this a better bet. You know, it's okay buying Bitcoin at the highs. Yes, Bitcoin's got a way to go, but this has not even begun to play catch up, and only really based back in March of this year. And even so, it didn't fall out of bed. You know, yes, it made a new 3-year low, absolutely. But from that point, it's been, you know, gathering pace and going up. So let's look at that on a daily chart, see what we can do with it. Now that looks, you know, quite sexy, looks quite the thing. That's where we started to go up from March. Could be like the stock market charts, to be fair. So you've got this line, okay, up here, and you can see where we're currently trading. So this line up here is coming in at 507, okay. So there's a bit of a way to go if we want to make gains to this area. It's not overbought. In fact, if you look at the stochastics and the RSI, you've got the RSI turning down a little bit. You've got the stochastics have just turned bullish on it on the daily chart, not from lower levels, but from, you know, still quite high levels. But if this has got legs to go higher, then, you know, this can be ignored. If it breaks 507, then obviously we go back to the weekly chart and we find out where the next level of resistance is. Now this is when you have to put the work in, because it hasn't reached all-time highs, nowhere near. We have levels of resistance that we can draw on to make predicted targets. So let's put a long-term fib on it. So we're going to go from there down to the lows. There. So you can see that the market hasn't even retraced 38.2. The 38.2 on this market is up at 596. So we still have levels of resistance in that area up here. So we don't need so much the weekly pivot points or the Fibonacci extensions, because we've got a reference point to go back to. Looking at this, I quite like this market, to be fair. I think if it comes back anyway to the 399 area, I think we should be looking to buy it, add into 370, putting your stops just below 370. It's looking like it's made a base. If you look across here, you've got this, I think it's made a big base, okay, a big base. So if you measure this base formation and just eyeballing it, you can see it's up around here somewhere, which is still only the 50% retracement target of the move from the all-time highs down to our lows. So bear this in mind if this breaks 507. If it breaks 507, yay, it's going higher, a lot higher. This could go a lot higher. It's lagging. So we'll keep our eyes on this one. Okay, good luck. I will catch you all later.